The stock market lost over $1.7 trillion erased in the last couple of days. But is that the end of the bull market? Hi, for those of you guys who don't know, my name is Jenny Baker with Six Figure Trading Coach, where we show you that trading is as easy as you make it on yourself. And I don't care if that's futures, Forex, or anything in between, but today we're going to be talking about more long-term holds, what's going on in the stock market, and some things that maybe you can do to either take a look at and or ways to position yourself to have a super profitable future. As always, for those of you guys who don't know, everything on this channel is for educational entertainment purposes only. We have to share that real quick. And don't forget to like, comment, and subscribe and do all the things that help YouTube get this video out in front of more people so we can help more people just like you. We're giving away over 7 figures, over $1 million in prizes this year. We've already given away $250,000 in the last couple of weeks alone, and we have more and more to come. So make sure that you're in the free public Discord and all the things. And without further ado, let's take a look at this heat map that you can find from a lot of platforms. Moo has it, of course. Thinkorswim has it, but there's a whole bunch of different versions. But take a look. Every single one of the major stocks and tickers have been down, and they've been down a lot in a big way. I want to go over to the actual charts and just look at what that looks like in real time over time. Of course, what better place to start than Nvidia, right? The beast, the man, the maker, all the things, the thing talked about probably more than almost anything else in the market. Although that may change in the future, I don't pay too much attention to all that. But I do, of course, like any other sound investor, have a long list of things that I look at long term, and I'm willing to trade short term as well. So Nvidia, look at this, down 31% from its all-time high. That's wild, right? And this isn't the only thing. Obviously, we know Bitcoin's down 30-40%. Everything has taken a nosedive like this. S&P 500, let's go to the VOO, but we'll go to either version is fine by me. We are down an awful lot. So that's July 24. This is February 25. Look at where we're sitting. And if you go to literally any major instrument, if you look at them on those bigger time frames, every single thing is down. So what gives? Of course, everyone in the streets are going to blame Trump. They're going to blame all the things. But the reality is, this was long overdue. A correction was vastly overdue on every single one of these instruments, stocks, tickers, companies, earnings reports, the fundamentals and the foundation of a lot of these companies. The pullback has been a long time coming. And I don't care who's in office. I feel like it was going to happen eventually. And that's just the cycle that we're in currently. So today what I want to do is kind of go over a couple of these pairs and talk about ways that you can position yourself to make sure that you're on the upside of the market when it gets back to the upside. Because while we click around, okay, and we will click through these are some of my long-term stock picks that I personally am heavily involved in, all the way from up to down, arranged from current day loss all the way up to current day gain, not in any particular order otherwise of importance per se. But take a look. We knew, and granted, this is a big time frame, okay? We knew without a shadow of a doubt, let's go to Apple, something that's always all-time highs, right? Nvidia, something that's always all-time highs. We knew this was coming. This is again on the month view. Let's go down a time frame. We had really topped out. We kept making higher highs. The fundamentals were not aligning. The earnings reports, the data, the heat maps, the book map, every single thing was showing we were rising this whole time without any reason to be rising. And if you look at the whole market, not necessarily a single instrument, that's kind of been the case. So it's just time. But the problem is with most investors is, let's take something super awesome. Let's go to MicroStrategy. Let's go down some time frames. The reason why everyone is so quick to say, well, trading is a scam, or I lost all my money in the stock market. It's because they weren't in the stock market correctly, not because the stock market and investing as a whole doesn't work long term, because it does. It does if you know what you're doing. So obviously, if you heard about this in November, I think we made a video about it actually. I was in Colorado at the time in Breckenridge. So this is when you heard about MicroStrategy and you were like, okay, cool, I'm all in. And you moved some of your retirement funds over and you changed some of your diversification over. You put half of your investment into it, or 20% or 10% or 5% or whatever that looks like for you. And then now we're sitting here, okay, down 46% from that high. Yeah, of course, that's time to panic, especially, you're talking hundreds of thousands, 7 figures. You're talking, for those of you who your life savings is 10, 20, 30,000 and you're down 50%, okay? I mean, by the time you spent fees and time and Opportunity cost, actually, let me fix that and go to current time. 55%? Yeah. Of course everyone says, oh my gosh, this is the end of the world. It's over. Everything's over and nothing's ever going to be good again. But it's really not. Really, I'm not the first to say this, and I will definitely won't go down in history for being famous for saying this. But when you see the stock market like this, really, all this means is something you really wanted to buy is on sale. And before I take any credit for any sound, long-term 20, 30, 40-year-old advice that's long older than I've even been on this earth, and if you haven't already done so, please make sure you read the book, Simple Path to Wealth. It's a really good book. It's very, well, sorry to take the name, but simple. It really helps you understand that principle, what 10, 20, and 30 years can do. And before you think 30 years is too long, if you don't have an alternative and you think your JOB is the only way you're going to get there, even in 30 years, your job and your retirement fund, especially if you're letting somebody else manage it, is not going to outpace inflation. It's not going to outpace your basic expenses. And better yet, it's not going to give you the dream life that you want. Whereas investing can. Trading, Forex, futures, stock, crypto, it literally can build the life that you want. And don't get me wrong, it takes capital, it takes effort, and it takes skill. But today we're not talking about futures and the day trading and the stuff that I do. Outside of that, today we're just talking about, so you have some extra money. Maybe you've passed your prop firms, you've withdrawn from your 401ks, you didn't want to, sit through this next 20% drawdown on your long-term portfolios. So let's see. You have some money. Great. Okay. What next? I don't care whether it came from a prop firm, a windfall, taxes, or you compounded your own personal account like we showed in that last video we posted on our Tuesday night videos. We kind of go over how to compound to, 6 figures from a very small amount. Doesn't matter. But now you've got a portion of your portfolio or a chunk of money you're looking to play with. Now is a really good time to go through and find the instruments that you like the best. Obviously, I'm a really, really big fan of Vanguard and VOO, VGT, anything Vanguard really here. Let's make that a little bit more alphabetical. We'll get to those quicker and easier. Very, 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 very good instruments, safe, not overly reactive to the market. But right now you're getting something that you would have wanted to buy at almost a, 15% discount. And 15% doesn't seem like much, but if you're putting $100,000 in this, you've made $15,000 just when we get back up to all-time highs. And we will eventually get back up to all-time highs. And before everyone says at the end, this is not the end of this pullback, it may or may not be. You, me, and the next guy, we're not here to call that. Now, personally, I think if you look at the major total stock market index funds, we're going to find that we have kind of a bit of ways to go. Kind of to give you an idea from where we're currently at, down to even some of our next levels, we have another 10, 12, 15% on most of these instruments. Of course, if we break through those levels, maybe a bit more, but figure you don't have to go all in today. So here's what I would be doing. I would be taking a look at this big list on the side. Pick the things that your heart desires most, or the things that maybe you align with morally, mentally, emotionally, however you see fit, totally fine by me. Take a couple, put 30% or consider putting maybe 30% at the most of what you're looking to invest. If that's $100 a month, it means you're putting $30 a month into any particular stock fund, right? That's it. Into any particular stock. Cool. 30% of the money that you're doing goes to that. And obviously this concept is going to vary based off of your age, your goals and what have you. But I'm talking just the basic person who's maybe anywhere between 20 and 40 years old. Here's a method that I would be using in terms of looking to build that long-term income, that long-term growth. I would not be selling here, okay, especially not if I bought here, because that's where most people go wrong, right? If you bought MicroStrategy is just the best example for this, because crypto, that's what everyone is doing wrong, is they keep buying here, they bought here, and then they sold here because they were fearful. Well, they took that I'm just going to use $100,000 or $100 as an example, and now they're down to $80 or $80,000 or $70,000 or whatever that looks like. And then, of course, the hype gets back up. It finishes selling off and it comes up a little bit. They're like, okay, cool, I'll buy again. And then what do? They react emotionally. And the more that you do that, the more you're going to lose in your long-term holds. So what I do is I have a dollar cost averaging schedule where I put in a little bit of money every single month into different kinds of accounts. Of course, there's Roth IRAs, health savings plans. Obviously, your situations are going to be a little bit different. You can do solo Ks and a whole bunch of things in between. SEPs. You can do self-directed from a lot of the accounts that you have, almost all the accounts that you have. Lots and lots of options. But the key point is just to invest, okay? Don't get scared right now. Don't sell off everything right now, because doing so, unless you're truly a really good trader, what's going to end up happening is you're going to sell at a loss and buy at a deficit and keep doing that over and over and over again. And at the end of your 30-year cycle, instead of that equaling 5 million for you, or 3 million or 2 million based off of your investment amount, you might have you might have 500,000. Whereas your neighbor, who simply picked their couple of stocks that they liked, their index funds that they liked, bonds if they're a little bit older, government treasury bonds good too, cool. Percentage that out based off of your personal goals, okay? Heavier on the side of stocks if you have more time, maybe less on the side of stocks if you have less time. Otherwise, your index funds are very safe and steady. You'll average anywhere between like 8 and 15% a year. Obviously, there's going to be down times. There's going to be times where you're just sitting still for a long time, and keep doing that. But now would be a good time to double down on that investment, because no matter what happens, even if we come down a little bit more, your average buy-in price, if you were a person buying up here in the 500s, the 400s, and I know a lot of people who were. I know Michael Saylor was still buying, and a whole bunch of other people were talking about still buying in this window, which was 420 all the way up to 540. Many buys were sitting up here. But before we decide to go off and sell, I'm going to zoom in a little bit and actually see some candles, because we like candles. We're traders over here. Okay, before we go a little bit haywire and wild and say, hey, wait, it's over, don't want to take any more of a loss, I don't want to see my portfolio get down, please understand, if you're a buyer here and you sell here, you sold at a loss. So maybe a better idea is to start looking for ways to dollar cost average in on the way down. We don't know when the actual bottom is. Again, I still think there's a little bit more room. That's 56, that's 65, at least another 10%, but we'll see what happens with crypto. We know we thought it was a big boom when Trump announced something for crypto, but what happened? We only pumped up shortly, came right back down. So again, we don't get to time the bottom, and anybody who tries typically fails. 99% of people simply don't. It's just not a thing. So instead, what I'm going to personally be doing is continuing to, as the market is on sale, I'm increasing my investment as we go down further, because I know I'm getting more for my money the lower this price goes. And at the end of this period, and I'll just stick with MicroStrategy, although, the history is not so good. Tesla's, of course, a banger, but this is back in 2018. The price of this is $20, okay? $20, and it keeps coming up. $60, that's 2020. Yeah, it's not a bad return on investment. Of course, all the way by the end of 2020, so this is March 2020, this is the end of 2020, 2021. Cool. Gosh, it's a 200 times, 20 times your investment. That is definitely not a bad way to be. And since then, have we consolidated, bounced around? Sure. But if you're a buyer anywhere in this market and you continue to be a buyer, no matter where your portfolios, where your buys stand, as long as you didn't buy here and sell here, you're going to be up. So here's my long-term list of a couple of things I'm either investing in my little play account that's more kind of day trading, very mildly, in terms of like Robinhood and Vanguard and Fidelity. And then, of course, more for the long-term accounts, I've got only a handful of stocks and mostly index funds. So a lot of them are Vanguard-based and total stock market-based. VT should be in here. There's a couple other that should be in here too. But VUG is growth fund. Obviously, we know what a lot of these are. You guys can definitely go do your own research, but go look up these tickers. And what instruments do you guys like to trade? I mean, what instruments do you guys think are good long-term investments? And what are you doing? If the market is down $1.7 trillion, what is your solution to make sure you don't get beaten up or get out at a complete loss? Because again, no matter which one of these you pick, none of them are safe from the retracement. And I don't think any of them are quite yet done. We've got, again, quite a bit of room to go. Of course, we know Soundbar, like this was not that long ago. This was December 24, all the way down. That is a huge drop. What is that, 70% of a drop? So for everybody who was super excited about this, almost 70%, the market is on sale. And look what happened with some of the bigger things. Look what happened with Tesla. Right now, this looks impossible. But give this 10 years, this could be the next stock that's at $300, just like Tesla. So don't give up on all this stuff yet. Take a look. Obviously, we know that Roku, Shopify, QQQ, of course, that's more fun, I think, for day trading. But even this isn't down so bad in comparison. Doable. That's a digestible amount. I do think we're going to double that, or close to double that. But we shall see. We will see overall. And that's it. So that's what I've got for you guys tonight. Thank you for all you do. Take care and God bless.